Another company that I'd like to move on to, and I can't help but chuckle a little bit about this one, it's McDonald's, because the company has really roared back in recent years under the leadership of CEO Steve Easterbrook. And personally, I swear all of my friends will groan when McDonald's comes up as just something they don't eat anymore. They complain it's unhealthy. But privately, like one-on-one, I'll talk to my friends and they'll admit to the occasional guilty pleasure kind of drive through for a Big Mac and French fries. And I feel the same way because given the success that we've seen with things like all-day breakfast, a better value menu, they've been investing in new technology like kiosk ordering, the refranchising efforts. I think the company has a lot of long-term irons in the fire that help it stand out even more in a weak market. And you just look at the most recent quarterly results. So US comps were up 2.4%, while international markets grew 4%, 6%. Revenues down from that franchising effort that I mentioned, but the bottom line grew 17% franchise because these franchising fees far more stable, exactly what investors want in this kind of consumer staple business. And the chain's renovating 1,000 locations every quarter. Delivery is now available at 15,000 restaurants. You add to that the 2.5% dividend yield and a market-beating 7% gain for the stock year to date. And it's like, okay, this really jumps out as an interesting option now for somebody who isn't looking to just completely clear out their portfolio, right? They're looking for something, play defense like we've talked about. What do you think?
I think McDonald's is a surprising source of growth in the fast food industry. Surprising because it's so large. One would think that these smaller rivals would take the available market share. But you're right, Vince, since CEO Steve Easterbrook took over, the company's made a lot of rapid change. It's aligned itself with a more progressive eating out culture, which appeals to millennials. It's removed some harmful ingredients from its list. And I would point to the innovations that you mentioned. I'm especially interested in delivery because that's not just a U.S. story, but it's a global story. And McDonald's has really ramped up its global sales. You mentioned, Vince, 4.6% odd comparable sales internationally versus that slower U.S. growth. It used to be that McDonald's depended more on North America for expansion of revenue and margins, and that equation has slowly flipped. And under Easterbrook, who really honed his chops in the UK, I see that continuing. I've always been interested in this stock. I think there are more guilty pleasure seekers, as you mentioned, than folks realize. And I do think that the company has an in to the newer generation. Their app has been pretty successful. I know anecdotally, and don't just take this with a grain of salt, maybe as much salt as you might find in a Big Mac, listeners. But anecdotally, my teen sons use that app, and we have always succumbed to guilty pleasure. So I love McDonald's coffee. I can't say that we eat there all the time, but I do think they've got an into the millennial mindset, especially with the delivery. Here's something that will interest readers. First of all, this company isn't found in the Staples Fund, but it's found in its sister fund, which is the Consumer Discretionary Select Spider Fund, and that ticker is XLY. It's supposedly a discretionary stock, but I want to make an argument here with this stock and one other stock that's coming up that we're going to talk about. In times of declining income, a stock like McDonald's is a staple stock because when you drop down from eating from a fancier restaurant to a fast casual or quick service restaurant, of course, McDonald's will benefit. And so I always think of it as a staple more than a discretionary stock. The wealth effect is very interesting to think about in relation to McDonald's too. Vince brought up his college economics class. So one from mine, this concept of when the stock market declines, consumers feel less rich and they tend to pull back their spending, which can then have a reinforcing effect on the economy, especially a consumption-based economy like we have here in the US. So I think McDonald's can actually benefit if the stock market goes down or if the economy really does start to indeed slow. Either way, it will see some tailwinds. Last thing I want to say about this company, if you went back to the 1st of January 2008 and looked at the company's total return since then, listeners, I'll pause again. What do you think it would average in the last several years, almost 11 years now? McDonald's has returned 31% per year on an annualized total return basis since the Great Recession. I kid you not.
Yeah, that is an unbelievable number. When you mentioned that to me before the show, I was just blown away because that is, that's what the kind of number that you expect, not from McDonald's, but maybe some of these high flying tech companies.